Ethereum has resisted a deeper fall so far, but resilience is not the same thing as recovery. When we look at Ethereum's oldest structure, we can see that price still has meaningful space below. And on the daily chart, Ethereum has already confirmed as support what was once the top of a descending channel. It is now testing the top of that duplicated channel. To understand that tension, we will look at Ethereum through 3 different scenarios. I observe, not instruct, for educational purposes only. First, let us step back and look at Ethereum's longest structure. This is the weekly chart, from launch until today. At first, it can look like a chart with too much history to say anything useful. But the extreme points begin to tell us where price repeatedly met its limits. When we connect those interactions through parallel geometry, a broader structure begins to appear. It does not tell us where Ethereum must go. It shows us the regions price can still navigate within that structure. The lower reference sits roughly 40% below current price. It is not a target, but it remains a possible support if weakness returns. The central line of this larger channel sits roughly 180% above. These are not conclusions. They are the mathematical possibilities inside this structure. Now, let us bring the question closer. This structure begins at the 2022 low. It is shorter than the first one, but it is telling a similar story. The important highs and lows begin to organize a shorter reading. Together, they draw an ascending structure that clearly guided price. Recently, price slipped below it and is now returning to test the same region. That is worth watching. If this retest is lost, the duplicated lower channel gives us 2 structural references below. The first sits roughly 40% lower, exactly the same distance we saw in the first scenario. The deeper one sits near 62% below. Not because Ethereum has to reach either one, but because charts carry memory. The same is true above. The median of the upper channel sits roughly 70% above. The top of the channel sits roughly 175% above, very close to the 180% we saw in scenario 1. Notice the confluence between these 2 readings. These first 2 scenarios show us where price could move. Now we can ask what is happening beneath that movement. On the daily chart, the gauge helps us read the quality of the pressure behind price. Even inside an indicator, we can see a visible structure helping guide the reading, not as a signal, but as a way of seeing whether the internal condition is changing. At previous extremes, a fading gauge often appeared near important lows in price, and when pressure became excessive, the chart began to show stress on the upside. The gauge is nearing the middle of its descending channel, close to 0. That is the first resistance we need to watch. This recalls the previous scenario where Ethereum is retesting as resistance what had once been support. Another point of confluence. In 2024, bearish divergences appeared here before price fully answered. Now, price has made lower lows while the gauge begins to hold higher. A positive divergence is beginning to emerge, but since we are still on the daily time frame, it is important not to rush to conclusions. Now let us move closer to the recent price structure. Ethereum broke above the first channel, then returned to confirm as support the area that had once held it down. Above, a new parallel offers resistance to price, coinciding with the gauge's descending median we saw just before. This is a confluence of many references. In conclusion, Ethereum has not broken in the way a deeper capitulation case would suggest, but it has not rebuilt the structure that would make recovery obvious either. Structurally, Ethereum is much closer to a major bottom than to a major top. Still, the chart leaves both paths open. I'll keep observing.